What's up, guys? This is Tyler with Division One Trading. This is the free Forex YouTube course, and this is the fourth video. We're going to be going over market structure. So again, pause the video if you haven't already read the disclaimers. So market structure. So just covering market structure. The way that we talk about it, the way that we're going to go through it, the way that we break market structure down is we have higher highs, we have lower highs, right? So when we're looking at the highs, right? Look at the second one, right? This is where we're looking at the highs and lows, and then here we're looking at equals, right? So here we're looking at the highs, and then we just look at higher or lower. So this one would be higher, this one would be lower. So when we're looking at higher low, right? We know that we're looking at the low, and the second one is higher. So this one here, we're still looking at the low, but now the second one is lower, right? And then we have equal highs and equal low. That's just a double top, double bottom. So we're gonna go through that again, right? So we had the higher high, then here we have lower high. Yeah, higher high was here. Then we have lower high, higher low, lower low, equal high, equal low, right? And then so just what is market structure, right? It's just the market moving. So if we just start off with one leg, we just have what we call a range. We don't really have any market structure in between here. We're just looking at this low and this high, right? We don't really have any way to gauge where the market's likely to move. We just understand that we're in this area and we're either expecting a continuation, retracement and continuation, or push lower, right? So if we have an information like, if we have an instance where we can identify a range, then we can build trade opportunities around that. So then we wait for more information. So right here, now we trade down. Okay, so now what's likely is we're looking for that retracement again, or it to trade lower. So if it starts trading higher, we can look to get on board with that. Right, so here it trades higher. So that's good, right? We could have been a part of that trade, chasing this impulse here, right? And this is, right, all, you have to wait for the right circumstance, but, right, so the market trades down again. Now we're starting to build in market structure because now we had one range, now we've created two, right? So we created here a low and a high, and now here, right, we had a higher low right here. Now we have a higher high, and now we're retracing, so we're expecting another higher low, right? We're expecting the retracement to push through again and create another higher high, right? If we're just following market structure. So, right, that happens. Then we go into a consolidation. So now price breaks down. So let's go through that market structure again. We had the low and the high, the original range. Then, then we had right here, higher low. Then right here, higher high, another higher low, higher high, and then right here we had another higher low, but then this failed here. So now we've shifted. So right here is what we call our shift in market structure, right? Something changed. We went from a higher high, higher highs and higher lows, and now all of a sudden we have a lower high. And now here we have a lower low, right? So those are both shifts in market structure. So now, right, that's almost like we're changing the range. Now we have a new high. Right, when we trade down, what we're essentially saying is, okay, now we have a new high and a new low, and we're just restarting this here. So now when it trades up, this level fails. So it's a lower high, right? And we can start trading that, looking to trade it down. That is going to be the trade opportunity that gives you a smaller stop, but this is going to be the harder one to catch. So the easiest move, and what we're going to talk about, is this here, right? So when we see this move here, when we see those three pushes, that's what we call a three drive pattern, right? So it's those 1, 2, 3, consolidate, and then break of market structure. At that point, right, once we have that break of structure, our eyes are back to this market structure here for retracement. And this here, remember, this is when we get a sell signal. And so what happens is retail traders sell here, chasing this price, right? That's where we wait, right? Even if it gets right here, we have to wait for that market structure. Then once it trades up into it, we can sell it and expect for it to trade down. And we're looking for it to trade to that low. Again, that's the three drive pattern, right? So 1, 2, 3 push. And if you've seen the trend line video, right, this is how you can use it for that trade as well. So you have 1, 2, 3 pushes, consolidation, break in structure, as well as the trend line. And then you expect that retracement and sell off. All right, guys, this is going to be short and sweet. Just a quick market structure video and market structure setup. Thanks, guys.